Chris, great to have you with us. And I'm wondering what if you assign any significance to yesterday's rally, given especially today's basic reversal of yesterday.
Yeah, I think a couple things to take away, thanks, Melissa, from the rally yesterday is the importance of the setup, at least for near-term trading. You know, if we rewind back to the previous CPI number, we rallied about 5% in 5 days on optimism. We're finally going to see that number roll over. And then just yesterday, we had basically sold off about 5 or 6% in 5 or 6 days leading into this number. You know, the sell-off yesterday, the bad CPI number. So we got that initial move lower, but you know, we were just getting relentless calls from our clients. How come volatility is not higher? How come the VIX is not higher? And then we started seeing investors sell their puts to close, and that definitely led to some of the market bounce we saw yesterday.
Yeah, it did feel like once we pierced 3,500, that was sort of like the signal to go higher for the markets, Chris. In terms of looking ahead, November 4th is what you say options traders are really looking towards in terms of expiration. I mean, that encompasses a whole lot of volatility sort of events.
Yes, exactly. And kind of like I mentioned, you know, a lot of put protection was sold to close, especially yesterday, the near-term stuff in October. And then we started to look for, well, where's everybody focusing next? We saw a lot of hedges, a lot of trades go up in the November 4th weekly options. Now, why is that? Obviously, you have the FOMC, and all of a sudden, after the CPI number, there's a pricing and a chance of 100 basis points. You know, it's 15% or so, but that's still going to add some uncertainty. You have 80% of the S&P components by market cap reporting by November 4th, and then you cap it off with another NFP number on Friday. So that's the clear focus for options trading in the near term for exposure to macro.
After that, though, Chris, is there any sort of seasonality creeping into how people are looking toward the end of the year after we clear those big events?
I mean, absolutely. I mean, if you look historically, the last 3 months of the year are strong seasonably, particularly when there's midterm elections. It back tests very well. The only issue, kind of like what Mike alluded to just before, is a lot of these back tests don't take into account a Fed that dampers the mood every time the market rallies a little bit. So sure, the seasonality definitely back tests really well, and given the sentiment and given the light positioning and everything else, we could absolutely be due for a pretty good sized bear market bounce, which would follow along with that seasonality. But the major difference is obviously always going to be the Fed.
Are there certain sectors, Chris, that's attracting more options activity in terms of positioning? I mean, financials would have been, a really interesting one to take a look at going into all of today's numbers. But going into earnings season, are there ones where people are really positioning heavily around? We're hoping to start seeing a little bit more single stock focus. There's been so much high correlation and focusing on the macro. And if anything, if I were to highlight, maybe Pepsi, we saw an overwriter today after earnings. It seems like people are maybe waiting to see what happens with the earnings and then take advantage of the move. I mean, even if you look over the last 2 weeks, we're kind of in a little bit of a range. We're bouncing all around. So maybe investors are looking to take advantage of that range from selling some volatility. Now, if you're going to go outside of the United States, we are seeing pretty consistent call buying and bullish flow in China-related stocks. And everyone's always looking for a bottom there. Obviously, that hasn't happened yet.